Welcome back to Liberty and Finance. We're delighted to have a first-time guest this week. Morgan Lekstrom is the president of NexGold. Morgan, thank you for joining us this first time on Liberty and Finance.
Thanks for having me on a Saturday. I love it.
We were introduced by a good friend and partner of ours, Diana Zopa, who through her efforts is also helping to promote such companies as Dolly Varden Silver and West Red Lake Gold and others that our audience is well familiar with because they met them at the Rural Symposium on Natural Resources Investing in Boca Raton, Florida. And one of the impressive things we learned at that conference just last month was the dearth of exploration and development that's been going on over the past couple of decades, and the timeline, the agonizing timeline that it usually takes for government permitting at least, and then development and building of mines. But how is it that NexGold, which is a freshly minted company, a merger of existing companies, and on a site that's been developed or at least explored by several waves of companies in the past, has such an aggressive expectation for forward progress compared to this usual multi-decade timeline? What is it that's making NexGold have a fast track outlook?
Well, that multi-decade timeline has already been used up. Someone already did that for us. So it's really helpful when you walk into a company, when you put it together, you merge them, and you already have 3 million ounces of gold. 2.1 of that is in the high confidence categories of proven and probable. Then it also helps that you have a federal environmental assessment done. Those things are, like you said, a decade to get, some 7 to 10 years. That's done already. We're down to the fine nitty gritty, which is the provincial permitting, the community engagement and community agreements. If you saw on Tuesday this week, we came out with a very, very milestone agreement for us with the Wabigoon First Nations. Very happy to have that cross the line. A huge exploration potential, like you mentioned. But not only that, transitioning over this next 17 months into a construction phase, building Canada's next, what I say is top 3 mines gold mines into production. Like, this is the time where you probably saw at the Rural Symposium, the bottom of the curve where people go into permitting, it takes years. We're coming out of that, and then we're dovetailing on massive expansion.
That's the expansion I wanted to talk with you about, because Rick Rule always talks to us about the importance of scale and grade when you're looking at assets such as in-the-ground deposits of precious metals. And can you talk to us about where your leaders are trying to take you from and where you're trying to take you to in terms of proving out the expanse of the asset that's under your boots there in Canada?
Absolutely. This might actually, blow your mind a bit. And that it did when I first looked at this company and the project. I was like, what? So you have what's called the Goldlund and the Goliath open pits that are in the resource model and will be built 25 kilometers apart from each other. You have 65 kilometers straight of known strike. That means mineralization continues. We have never drilled in between. So we are starting that drilling right now. So you have a pit, a smaller pit up north called Miller, and then it just, it makes sense. There's something in between there. We call it the Interlakes target. The team for the past 10 years has been excited and wanted to drill this. And we finally said, enough's enough. Let's show that this is that massive district. It's 3 million right now between 2 pits. Let's show it's much bigger than that. And I feel like we're on the precipice of something of a large district. And when we build our mill there, we'll be the only mill in 240 kilometers. So there's a lot to be said about that.
And what kind of scale is the existing asset? You mentioned 3 million ounces in the proven category. And what are the targets of your leaders as far as the additional exploration that they're looking for based on their geological expectations of what they hope to find?
Yeah, when you say leaders, I'd love to point out Adam Larson is one of the leaders on the geology side. He's a director of exploration here. We're hoping for 2 things, really. One, when I say proven and probable, 2.1 million of those ounces, those are high confidence. We know we can build a mine around them. We will be a 110,000 ounce per year producer for the next average of 13 years. That's a very nice cash flowing, low cost mine. What Adam and the team are actually looking for now are those extents. let's find another Goliath pit. Let's find another Goldlund pit. Let's find those outcrops, which they're everywhere along strike. We've been doing exploration work there for a very long time. But now with NexGold as a company, with Frank Juster in the back, backing that and some very strong shareholders, we can actually go out and drive the dual path. So you've got the path to construction and you got the path to exploration upside and growing this massively.
As we've been educated by Rick over the years for our audience, he visits us monthly on our channel, Liberty and Finance. He's talked to us about how the ironic thing about investing in a mining company is that they're sitting on a depleting asset. So while they're proving success at extracting metals from the ground, the cache of metals that are in their deposit is getting smaller and smaller, and eventually it may become uneconomic. But what you're describing is such an additional potential expanse of unexplored and unproven additional potential in between your existing known deposits, that there's a potential that could be a much more massive scale. That's attracted the attention of not just a few significant strategic investors. And as we've been educated by some of our other guests about the importance of strategic investors for multiple reasons, one, the most obvious, is providing some sustaining capital for the future, exploration and operation of the company. Another is the fact that they've done enough due diligence to believe that that is a place where they want to, where you've got people with significant experience and influence, putting their massive capital investment behind it. Can you talk to us about which strategic investors are backing NexGold and why that should matter to prospective retail investors?
Absolutely. But I'm going to preface it with starting with one of the points you brought up, which is the people behind it, as in the team. You can have a really great gold resource, copper, whatever it is. You can have a great mine that's ready to be built. But if you don't have the team to advance it, you've seen these over and over and over where they fail because they don't have a cohesive team of mine builders. That is the opposite of what we have. We have a 40-year mine builder as the CEO and as my right side on this. I'm the president. He's the CEO. You have a person that is chairman of the board that used to be the president of Barrick, the ex-CEO of De Beers, arguably one of the most notable mine builders in Canadian history. And you keep going down in the company. I have 18 years plus of mine building and industrial experience. So you keep going down the ladder in the company. And that's something that attracted people like Frank Juster. You see that they built not only a team, but a cohesive team that can build these, that can build one and then the next and then the next. And that's how you accelerate into a mid-tier company. So for us, it's not just a matter of building Goliath. It's a matter of setting up the next one and the next one to keep that team together, to keep progressing. That's a very important part. So it's attracted people like Frank Juster. It's attracted people like Extract Capital, who take, nice bets on companies that they do a ton of due diligence on. Sprott Royalties has a royalty on the Goliath complex. Again, you have very sophisticated people that have sophisticated teams to do due diligence that are taking bets on this, because when they looked at it, it's still, as of right now, it's trading 0.07 to NAV. It's a $700 million MPV or 650 million MPV at 2150 gold. It's got a very fast below 2-year payback. It's got the right IRR in the 40+%. It just needed that financial and that sponsor that is now the people involved. So this is what we call the base asset to build the next mid-tier off of. We want to build something that's between 200,000 and 400,000 ounces per year in the next 4 years. And I think we can get there. Like you said, expansion, potentially M&A, but also just building off that base, adding more resource as we go. You got 65 kilometers and we've only explored about 8 of it.
And this potential for additional projects beyond the two main areas that are already well defined gives you more diversity and resilience if there are disappointments that might run into, or roadblocks you might run into that affect one mine or another. Not every company has that. So can you talk to us a little bit about how prospective investors can look forward to the additional potential projects that you're expecting to be developing, so that they know that you've got more diversity and reducing risk in that regards?
Yeah, look, I'm a huge believer in pipeline of projects, right? You're going for a one shot where you're building one open pit and one mill and putting all the bank on that. We've seen that often. You get these bloated capexes and all that. So what we have is we have the Goliath pit, which arguably is about 1 million plus ounces, and the Goldlund pit, which is 1 million plus, almost 1.8 actually ounces. So you have not only two open pits and a centralized mill location, but we have all these exploration companies around adding ounces to their portfolio. Do you think someone's going to go out and build another mill when we're the centralized mill? It's way cheaper for them to permit and way quicker to permit a mine, just a mine, and direct ship to us. So not only are we going to get the benefit of our 65-kilometer strike and our two open pits, we're going to get the benefit of all the other people doing work, and they're going to get the benefit of this. You intrinsically create a district scale with one central point, like the nucleus, the hub. And that's something that interested me. Plus that ability to take that team through either M&A or discovery and build another one. Just continue. Like, this is, to get the team is the hardest part. To get the asset, everyone would argue that you can have a great team and an average asset and create a great company. You can have a great asset and not the right team, and you can kill the company.
I wanted to talk a little bit about the share structure, because it's encouraging to hear that, for example, as people become potential investors in a company that's got a growth ambitions, as NexGold does, to become the next mid-tier producer, they're concerned about potential dilution of their shares if the company needs to go for additional financing. But the warrant structure, as I understand it, enables some of your existing investors, the strategic investors, to benefit or to convert their warrants into shares without diluting the other shareholders. Can you explain that to our viewers?
Yeah, so we have 76 million shares out. So in the world of companies, that's pretty tight. That's Frank Juster over 10%. That's Extract just under 10%. That's Sprott just under 10%. That's Management Tech, a couple other people. We hold about 42% of the stock in hands that are not letting it go. So you have another 17% in the institutional side. So you have a float, which is good. You want that. You want investors to be able to buy in without the worry that there's no stock there. Now, the warrant structure in itself is mainly held, I'd say 90%-ish held between those investors, those key investors. So again, people that are going nowhere because they understand that there's huge exploration upside. They understand that there's huge production upside. So you're kind of you're dual leveraged. And I'm waving my hands a lot. You can't really see them on the screen. But look, that warrant structure is really key because of the people that hold it. This is the thing. If you have warrants spread out through 9,000 people versus 8, right? You have 8 high net worth people that can convert their warrants, and yes, you'll add shares, but again, you're going to add rock solid, long hold shares. So it's really not going to mess with the cap table in any sense. We have about $14 million in the treasury as well right now. So we're positioned to grow over the next year. We're positioned to go into the end of our feasibility study. So not looking to raise anytime soon for this project, but hey, look, opportunities are in the market. And I think our main focus is showing that district scale potential, but also looking at strategic moves. And
again, where in many cases, companies trying to move into the scale up and build stage are looking at a decade plus, maybe sometimes 2-decade timeline, including all the permitting, everything. You mentioned earlier, like a 17-month timeline to what milestone that people are looking for?
So by about Q3 next year, we'll be looking to make a construction decision. That means we're permitted far enough that we can start to finance and build. The feasibility's done. It's bankable. Some of the engineering's done. We're accelerating. I like that you bring that up, that it takes 10 years plus to get here. I mean, probably takes you 5 years and $80 to $100 million to get the resource to where it's at. It takes you another 5 to 10 years to permit it. So, you're, let's say, ambitiously 12 years when you start on the ground to find it, to permit it, or even longer, 15. This is why we loved this project. This is why I won't want to speak for Frank, but this is why I think Frank and the rest of the big investors really like this project, because of the phase it's at. You've eliminated all of that risk of downside. You've eliminated all the risk of time delays. Now we're in the final stretch. We're at that, we're between fourth base and the home plate here. And that is like, we're this far from the home plate. We just need to touch it. So Q1, end of Q1, feasibility study, end of Q2, mid Q3, we'll have construction decision, IBAs, which are impact benefit agreements with the local communities. We're looking, and these are timelines that they move a little bit here and there, but we're looking to be shovels in the ground at the very start of 2026. And this next growth period, when you look at like how Rick Rule talks about it and Pierre Lassonde talks about it, you get to the bottom of the Lassonde curve, that's your permitting. You start to come out of that and you start to skyrocket when you get into a developing phase. We're right there, but we're also on the other side of the Lassonde curve on that exciting exploration and discovery phase. So you're dual leveraged up, which was the plan.
And some of this information is available in the corporate presentation that I see on your website, which is easy to find. It's NexGold.com, NEXGold.com. We'll put a link to that in the description of this video. Other advice from you on prospective investors who want to find out more about the company, what's their best way to reach out?
www.nexgold.com or info@nexgold.com, or our stock ticker NEXG.V in Canada. The other thing to keep in mind, I just want to leave investors with this one thing is, when you look at a company and you're trying to make an investment decision, there are multiple avenues, and Rick Rule talks about this all the time, and others do too. You want to invest in the team, you want to invest in the rocks, you want to invest in the jurisdiction. It's very rare that you get all three together perfectly. And this is, I've worked for companies like Freeport in Indonesia, the Rio Tinto Mongolia, spent time in Africa, Peru. Same with our team, right? They've worked all over the world. They've built mines in Canada. So you have enough intrinsic knowledge in the group and people like Frank Justra to say, yes, this is something that is going to be real. And that's, I grew up in a small town in the backcountry farming community, and I've always liked the idea of something real. So that for me is how I look at this company. It's a growth platform, not only with a great asset, but into the future, hopefully that pipeline of great assets.
Well, we will enjoy staying connected with you and keeping your story in front of our viewers and subscribers, because we're a rapidly growing community of folks who are interested in real things. We've been interested in real things since we started in 2013 with a preparedness focus. That preparedness focus quickly took the center of gravity of that became financial preparedness, and the center of that has been precious metals. People in our viewers and subscribers, our community here, are very interested in making sure that amidst all the changes that are coming in our world and that are happening right in front of our eyes right now, that people are able to hold on to real things. And it's exciting to meet another company such as NexGold that is focused on already making the most of the real assets you already have and making sure that you understand better the potential and the additional scale and grade that may be right under your feet. And we'd love to keep bringing your story to our viewers here on Liberty and Finance.
Appreciate the time on the Saturday. I know there's lots of family and fun to be had, so I appreciate it.